Wow, what a crazy day in the markets today. We're just going to go over this quick article on CNBC about how the stocks did today. I'm recording this on Monday night, but probably won't have the video up until Tuesday. So just bear with me. So, as you can see, a $1.1 trillion drop in stock market value basically within the past 2 weeks, and this is all because of some trade wars between the United States and China. Now, every time that President Trump tweets, people and investors watch that and they will trade and buy based just on his tweets. It's crazy how much power one man has with his fingertips and all the volatility that comes with it. So, everyone thought that the trade talks were going well up until this past weekend when some tweets by Trump showed that the negotiations with China were actually falling apart, and now they are trying to renegotiate probably later this month on a new trade deal. So people are expecting the stock market to continue to decline here as the tariffs they really do impact the global economy. Obviously, the United States is the biggest economy in the world, and much of the biggest companies in the world operate there. So this is going to affect everybody, just the global market, basically because of a trade war between two countries. So stocks plunged today. Dow was down 600, which is about more than 2% actually, which is huge. The worst day in the market since January 3rd, and investors fled to bonds. I personally, obviously, I know everyone's different, especially depending on what their age is. For me, I would probably just stick my money into utility stocks, but obviously, if you're older, I can understand why you would be putting more money into bonds. But yes, yet again, Trump's tweets will cause the market to cause a lot of volatility, which I think is good because a lot of these stocks they were just going up and up, and that's a red flag because a lot of these stocks are now becoming overvalued. So they were susceptible to a drop like this. So as you can see, 1.2 trillion lost in market value since May 3rd. This is great because this means a lot of stocks are now on sale. They're probably at more reasonable values, and you can maybe afford them now that they're not so ridiculously priced. And as always, anytime the media is reporting on this short-term news, everybody goes crazy because they think the world's going to end because of this news. But really, when you look at the holistic point of view, when you're investing for the long term, then 5 years, are you going to really remember this one day in May when the Dow went down 600 points because of some trade negotiations between two countries? Probably not. Both of these countries, I do expect, will get over this little hump that they have and resume negotiations. China, it may have hit the U.S. with $60 billion of tariffs, but I suspect this will all be short term. The media, of course, will play this as a long term impact. Then all the stocks are going to continue to fall, but they're just doing their job. They know they'll get more viewers if they cause some hysteria, and that's exactly what happened as the Dow went down 700 points. S&P all down about 2.5%, which is huge. So a lot of people ran to the treasuries, the U.S. bonds, but like I mentioned, I would rather want just invest in companies that went down because I know I can get them at a discount now. Or two, I would put my money in utilities because if you think about it, a company like Southern, for example, it's a utilities company. Nothing about the fundamentals of that company that operates in the southern part of the United States is going to change because of some trade wars. They're still going to continue doing business. People are still going to be paying their utility bill. So nothing to really fear there. So let's look at the FinViz. It has this really nice maps feature. So you can see a lot of red, a lot of stocks just bleeding, blood all over the streets here today. A lot of stocks got hit harder than others. Apple down almost 6%. I think this is an overkill. I know they do a lot of business in China, but really down 6%. Especially, what's funny is that they had this great earnings report less than 2 weeks ago, and everyone was so optimistic about Apple again. Then, of course, something like this happens, and the stock just drops right back up or right back down, and everybody is pessimistic about it again. So that's what you want to consider when you might be buying a stock on the dip. Home Depot down here, Amazon down 3%, Disney 2%, Johnson and Johnson down. Bank of America got hit huge here, almost 4.5%. My favorite industry, the credit services, a lot of these stocks are down. If you want to buy some of these stocks on discount, I feel like now would be the time. REITs, they went up. A lot of these are green and some are a little bit on the lower end of red, but these usually pay higher dividends, so that's why people went to these. But you'll notice that one particular industry is always in the green during down days like this, and that is the utilities, like I mentioned. These will pay high dividends, and their overall business structure isn't going to change because of some trade wars. And as people panic, they will start shuffling their money into these utilities. So that's why it's always important to hold a couple of these just to diversify your portfolio and protect it from some short term fluctuations. So I don't know. What are you guys thinking? I definitely see quite a bit of stocks that are finally at some reasonable valuations. 3M is definitely one on my radar. I've been keeping an eye on it, but I've definitely been putting more and more money into my Robinhood portfolio, and I'm anxiously waiting to buy more shares. As always, guys, make sure to like, comment, and subscribe. It really helps me out. Let me know what you guys are thinking, and stay tuned for more.